Hey guys, it's Nolan. Hope everyone's had a great weekend. We're a few hours away from the new trading week, and there's a chart that not a lot of traders look at. You know, they may trade, gold, they may trade silver, two of the most popular precious metals to trade. But have you ever looked at the chart gold against silver, which is what we have in front of us? So basically, which is stronger, gold or silver in the market? Well, this is the daily chart, as you can see. Now, quite interestingly, we have a very nice supportive trend line there, as you can see. We do have some resistance as well, so it's in an expanding channel, something like that, very crudely. So I'm having to use this as a false break, but then we've got these highs here and these highs here. So we've got some nice trend line resistance there and trend line support. So we've come into support here, and this was early October, so this month. And just looking at what is happening at the moment, well, we've had our push down from resistance. We've made a high, we've made a low, and then we've made a higher high. So the fact that we've bounced off here anyway at this support level, we might think, okay, well, we might see this chart actually push to the upside. So we might see gold stronger than silver. Now we've had a push up, like I say, we've had a new high because it's higher than this high here, so a higher high in fact, and now we're pushing down, so we could be looking to make a higher low here. And what we actually could be doing, the pattern that stands out to me at the moment, obviously we're not fortune tellers, but what could be happening is this low, lower low, higher low, so an inverse head and shoulder pattern. So I'm very interested in this this week, and just the fact that we've got this nice ascending channel, the bounce here meaning potential gold stronger than silver, inverse head and shoulder pattern, which would confirm that if we started to see price push to the upside. So that made me have a little look at the gold chart with in a mind of potentially looking for some strength to come into gold. Now gold, it's a bearish trend on the bigger time frame. Let's just go to the weekly. As you can see, it's a weekly bearish channel, chart. There's probably a channel there. I mean, this is gold against the US dollar. Anyway, US dollar is very strong currency, strongest currency in the world. But with the gold versus silver chart in mind, could we see a little bit of gold strength coming into the market, whether it's longer term, whether it's just short term? So I've marked some levels here on the daily, and what I noticed was we've got this level here at 1620, and now last time we came into this level here was late September, and look, we had this bullish engulfing candle here. From there, we broke the high. We did pull back a little bit, but we broke the high, and then we pushed all the way up to 1727 before we reversed again. So we found resistance at 1727 and come all the way back to 1620. Broke and retested actually 1680. This is an important level to watch as well, because look at this level here where we break, retest, boom, go down. So this is an interesting area to have marked down as well. Did exactly the same thing here. We broke down, retested, and then pushed down back into 1620, where for the second time we have seen a bullish engulfing candle. Now also, if I just do that, and then I'll just forget the moving averages for a second. What we're seeing is on the MACD, we're seeing this low, lower low. It's not a lower low, but we're going to call it an equal low. It's pretty much almost an equal low. Continuous divergence there. Also continuous divergence on the MACD. So where we're seeing lower lows in price, we'll say equal lows here. We're actually seeing higher lows in the MACD and the RSI. So if I just leave the RSI on for a second, oops, didn't mean to do that. So the RSI, delete that one. We can see this nice push to the upside on the lows, whereas we're making, we'll say equal lows here. So that is divergence on the RSI. Forget about the moving averages for a second. They're bearish because the whole trend is bearish. But yeah, this bullish engulfing candle, obviously looking at what happened before, we could forecast that price is going to make another push to the upside on gold. Okay, so now whether it's going to come back into 1727, we don't know. But what I would say is think about 1680 as a potential first target if it does push to the upside, because that is an area of interest. It's an area where it's an area of resistance, as you can see, a break and its resistance. So who knows, we could see it as a resistance level there and we bounce. So any longs here, I will be taking money off the table at 1680 and then further targets at 1727 where we found resistance. Now how would you trade this? Well, you could place a long above Friday's candle, stop below the low. Now that's going to give you an inverse reward to risk to the first target, 0.48. Maybe we'll call it about, we'll call it 0.5 to 1. But then obviously to the second target, that is roughly around 1.59. We'll call it, just round it down, 1.55 to 1. Now there's a potentially a better trade to take. Now it won't necessarily trigger, but it's something you can think about. This one probably would trigger because there's no tip on the wick there. So highly likely that a buy stop above this high would trigger. Now the other trade, so this is a 1.56 to 1. The other trade you could have a little think about is just by looking at the 4 hour. We've seen our impulse up. We've actually seen to show you a break of this trend line as well, break. So we could be looking for a correction here. Now, interestingly enough, we do have a level where the 4 hour has dropped down to a number of times, which is this level here. So that has acted as support there, support and resistance. So it could come back into this level. So if I just get my crosshairs, so we're talking around about 1642. Could we say 1640? Maybe 1640, but I can see this tip of the wick here. The actual low was 1641.575. So I'd rather say something like 1642. And so you could think about a buy limit at 1642 or 1643, it doesn't really matter. We'll say 1643 just for the sake of the video. That would be a buy limit, stops underneath the low. And then your target to 1680, which remember is our first target, is a 1.42 to 1. And further target is now over a 3.2 to 1. So a massive, massive difference. Okay, so a couple of options there. Firstly, the buy stop, or secondly, the buy limit. Now you could, in fact, split your risk. If you were going to risk 1% on one of these trades, you could actually put 0.5% on the buy stop, 0.5% on the buy limit. Okay, if you wanted to split your risk, just in case you thought, well, just in case it doesn't pull back into 1642, 1643, and it just goes, well, at least I've got my buy stop there. So, there's a few things, depending on what type of trader you are, a few things and a few ways you could trade this. But certainly, looking at the gold versus silver chart, looking at this chart, the bullish engulfing candle off previous support at 1620, it does appear as though we could see some upside on gold over the next, we'll say this week. But what I would be looking is 1680 and then monitor price from there. So let's see what happens. Let's see what happens. I hope we do push to the upside on gold, and I hope we can all make some nice pips out of this market this week. So guys, that's it from me. Have a great rest of your Sunday, and I'll speak to you soon. Don't forget to like, share, and subscribe the video if you don't mind. Brilliant. Thanks guys. Bye.